Hi everyone, welcome to the Price Rejector preview. My name is Michael Valtos. I'm the founder and trader at Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so what I'm going to talk about today is the new indicator that we had programmed. It's called the Price Rejector, and what it means, why we called it the Price Rejector, is because it's going to give you an indication when price appears to be rejected in the market. Now, if you're a regular Orderflows user, my usual software, the main way I look at order flows being rejected is with the ratios. When you see, a blue number, it's sort of at the end of a move like here and here, that's a sign of rejection. However, there's another sign of rejection when this one is more of a macro view, I'll say macro view, but more of a longer term view in the market. When you're looking at this individual bar, it's based on this bar that you're getting the ratio, whereas the price rejector is taking into account a few other things. It's taking into account the volume in a bar, the volume in the bottom of a bar. After a move that's happened, it calculates that a move's happened. It also calculates the price action of the bar, that the bar, there has to be, for a buy signal, it has to be indicating that there's buying going on, and for a sell signal, it has to indicate that there's selling going on, and it has to be, like I said, at the, after a move that's happened. If you're looking for a reversal, you have to have a move to reverse. You can't reverse something, when you're sort of in the middle of an area. So, the price rejector takes into account a few things. It takes into account that a move has already occurred. It takes into account that volume has been decreasing. It takes into account that opposite price action has been happening. So, if the market's been selling off, what you want to see the selling decrease and you want to see buying increase. And the last one is some form of market imbalance. Now, markets move because it's looking for a fair price to trade, for people to trade. And, a lot of people will call that the noise in the market, where the market just trades back and forth. Well, that's not really noise. What's happening is trade is being facilitated. The market's doing what it's supposed to do. Once it moves away from a fair price to an unfair price, that's where you're going to get, oftentimes, you're going to get rejection. That's where the price rejector comes in. So, it's looking at basically, the four factors that I just explained. So, I'll just sort of walk you through a few charts. It was designed, all my indicators are designed to run on an order flows chart. I think that works best. I think that you should not just take trading signals blind. You have to take everything in context of the market. Obviously with the indicators like the Delta Scalper and the order flows trader, looking at it in an order flows chart will, I think will make it better, because then you could analyze what's actually happening in the markets. So I'm just going to run through a few days of charts here. This is the E-mini. This is a 5-range chart. This is the 13th of May, Friday the 13th. And here you go. Okay, it's going to be the signal. Usually I don't like to have the zone drawn out. You can adjust that. If you're looking for it to be a support or resistance level, you might want to have the zone. In this example, I put the zone in there, this zone. You could adjust the length on how many bars out you want it to be. I have it set at 5. But I do like to have a hash, a green hash for a buy and a red hash for a sell. When you see the sell, you'll see a red hash up there. And so, okay, here we go. This is 7:30 in the morning. You have a buy signal right here. And, the market went up, right? It reversed off this move down. And then, we sort of hit our swing high, came back down, and you're seeing another area of price rejection, and the market went back up here. Scroll forward. Here's one. It failed. This is a sell. This was a, you see the red hash there. Again, you could adjust, if you're using my software, you can, if you don't adjust it, it's going to go right over it. You can adjust it, if you want a little bit higher, a little bit lower. I think if you put 0 in, it'll appear right on top of the top volume. But I mean, it's, or you could adjust the colors. And right now I got dark red on this chart. If I had a lighter red, then I'd be able to see through it. But this was an area where it was giving you a signal that possible price rejection. It didn't happen. The market just went sideways. Oftentimes, what you're going to have is, like I said, a market's going to move from a fair price to an unfair price, and then back to a fair price. Now, that doesn't mean that it's just going to bounce back up and down. Sometimes it's going to take a market a while to find the fair price. So you have your first signal here that maybe there's a price up here, some price rejection, and it's just rejecting the market. But it doesn't reject it; it just goes sideways. Usually, if it's just going sideways on you, that's a good sign that it may just sort of continue. Again, just because the market's looking for a fair price doesn't mean it's going to hit a high and come off. It can just keep going until it finds that fair price. Right now, it kind of paused here, and you didn't get the sell-off that you're looking for if you're short. I mean, obviously, if you're trading, you should be using some forms of tight stops. Your tight stops would just be right on the other side of this high. It's not going to be 4 or 5 ticks past this high. This is a 5-range chart. You should have a tight stop. But I mean, here you're getting moves of you saw earlier this move here was 55 up to 59. Here it was 50, whatever, 54.5 all the way up to basically back up to 59 again. Okay, so is it worth risking a point, a point and a half to get a few points, 3 points, 4 points profit? I think so. Okay, hang on here. So, again, what you're looking for, are these areas. Again, you don't have to use, these zones drawn out. I have them here, so it's a little bit easier to see in this video. My computer's acting up. That's because I got a lot of charts on my screen running. Okay, so there was no sell up here. Let's see. So we came back down, and again, down here again at around this 56.5 level, you're seeing some signs of price rejecting. Now you have a ratio as well, which is an extra, I'll say extra bonus, but it's a sign that you're seeing price rejection. Ideally, that's why I like to use it with the order flow chart. It will run on a normal bar chart. I'll go over some bar chart examples with you a bit later on. And any of these trades have the ratios? I don't think so. I mean, ideally, you'd want to get some sort of confluence. Okay, here there's no ratio, there's no ratio. This one you did have a ratio, which by itself is indicating price rejection. Okay, so the market did pop up, 57.25 to 60 before coming back off. Again, it's not a trade that's going to go to infinity. This is a 5-range chart. I mean, that's the thing that bothers me sometimes with traders, especially newer traders, is they think every trade has got to go to infinity. It's got to last an infinite amount of time. When you're trading, market goes up, goes down. Things change in the market. So, if you're using an order flows chart, what's the sign that things have changed? If you're seeing a selling imbalance in here, so if you're long in here, all of a sudden you see a selling imbalance, obviously things have changed in the market. Sellers have taken over. So, if you were long and you didn't take a profit, seeing this is a sure sign to get out of the market. But again, don't think every trade that you have has got to be a 10-point winner. It's not like that. I mean, trading, the goal is to last a long time, and that means taking trades that are going to keep you in the market for how many months, and then just keep building up the position, or taking a series of smaller trades for smaller profits and smaller losses. Okay, so here's one. It didn't, so this buy here, yeah, it went up a couple points. You could have got something out of it. This one started to, but then turned around and came off. It stopped you out. I said not every trade is going to be a slam dunk winner. And sometimes the market hasn't found its level that it wants to reverse. When I'm not trying to pick the low, but I'm trying to pick an area where a low can occur. Where there's price rejection. Usually, if you're looking to buy, you want to buy in an area where the prices below that area are being rejected. So I think this trade, would give you a low risk trade. Your stop is just going to be down, below here, below this level. I like where this bar is. That would be my stop. So, if I'm getting long in here, basically I'm risking 1, 2, 3, 4, 5, 6 ticks, a 1.5. I could live with that. We finally find our low here. And, you're getting along around the 54 and a quarter level. And you trade right up to the next level at, what was that, 58 and a half? Well, I don't think you would have sold 58 and a half. So I think, 58. Hey, I mean, that's, 4 points right there. You risk, here you risk a 1.5, you lost, and then boom, you make it right back. Okay, this one, it kind of struggled. Honestly, it struggled. It started to come off. I mean, it did come off a little bit. Sort of came back up. It hadn't found its level. And then the market sold off finally. Then you come right down to another level here. Okay, this one went up, sort of traded around. Okay, then it failed. Again, when I use these zones, again, I like to, the reason why I have zones, for me, when I'm looking at something as support and resistance, it's support and resistance in the near term. It's not support and resistance for the entire day of trading. That's why I have five levels. So if the trade's not really, if I'm in the trade 5 levels out and it's hardly paying off, I'm not looking for the market necessarily to come out and stop me out. In this case, we got up to the 6th level before it turned around, but it could have very easily just keep going up. In this case, we got to this level. It's in the 4th level, 5th level, 6th level. It's still in there, still hanging around, a little bit, in profit a little bit before finally selling off. Okay, here we're going higher. Didn't really reach our level. Didn't get a price rejection, right on the high. But in this case, you got some decent stopping volume up there. You could sort of read that in the order flow yourself, I think. Then we get to this level here. This is 11. I just chose this day. I didn't cherry pick a perfect day. There's going to be days where there's a lot more winners than losers. There's going to be some days where you have probably more losers than winners. I'll be honest with you. This is not a 100. Trading is not a 100% thing. It's there's so many factors that you can't factor into the market. I mean, you don't know that as soon as you click buy that there's somebody at Deutsche Bank that's got a big sell order that they got to get filled. You could buy your 5 lots thinking, hey, I got the best trading setup in the world. Then, 30 seconds later, the guy at Deutsche Bank says, okay, hey, I got to sell 5,000 S&Ps. Boom. And market sells off 2 points. What do you do? That's life. That happens. You don't know when it's going to happen, but it does. It does more than people care to admit. Okay, so here's a case where, we're sort of struggling. You get a sell, you get some sign of price rejection. We come right up to that level again, and now you get a sign of some stopping volume. And I just said, when you get into the 5th bar, which is this bar, I'm usually looking to get out. But once we get in sort of in the middle, and then I get another sign, I'll probably be looking to hold it a bit more. And then we just came, we sold off from, what is that, 57 and a half rather, down to 3.5. We did get another signal down here. This one, we didn't quite find our level. Down here, we sort of found our level. Yeah, sort of went sideways before the selling came back in. Another level that failed. I wish every single level was a big winner, but sometimes the market doesn't necessarily find its low that it's going to reject. As I said, the market's in a constant state of flux. And usually by 3 o'clock, I'm not looking to trade, cash close, and I'm just not interested at that point. Okay, so just real quick, also what I want to show is on a Forex chart. I said I'm not a Forex trader, but a lot of people ask, can these indicators work with Forex? Yeah, I think they can, because as long as your data is good. This is the FXCM feed from Kinetic, which, to the best of my knowledge, is the FXCM feed that you trade off of. Now, obviously FX is something that trades around the market, and there's going to be times where there's more liquidity than not. Obviously, I think the times when there's most liquidity is best for trading, but the FX market, so it's a 24-hour market. So I'm not a spot player. I like to trade during the normal trading day, and the problem with FX, for me at least, from my way I think, is I'm not someone that's going to come sit down in front of a screen for 30 minutes and start trading. If I'm trading, I'm keyed into the market and seeing what's happening during that time. It's not I look at it on my phone, see what the market is. Okay, yeah, nah, and trade like that. For me, I like to set aside the same time of day for the most part to trade and analyze the market. You have to, part of trading is having the right psychological surroundings, in your office at certain times of the day. That's what you want to do. FX guys, it's not something where you can just turn it on and turn it off and start taking signals. Now, so that said, okay, I'll just go through a few days. Honestly, I don't know how this panned out. I just happen to have the chart running, with the indicator on. I'm kind of curious myself. So, here's a sell signal. The thing with FX is sometimes it doesn't necessarily turn around on the dime in the way futures have a tendency to, partly because there's a bit of arbitrage going on between the futures and the cash market. I don't think people are arbing the CME euro against the FXCM euro, but still, oftentimes I've always noticed that, I've always felt that you get a little bit of a pop. Say you get a sell signal, sometimes you get a bit of a pop up through it before the market goes in the direction that you're anticipating. And part of it, I think, is just because of the arb that's going on in the cash market. I don't know where FXCM gets their feed from, which bank, or some series of banks. I'm sure they deal with one bank, but or maybe they're just so big that they got their own flow. I don't know. I don't trade Forex, and I don't claim to be a big Forex guy. So here we go. Okay, so there's a sell signal. Yeah, most of my charts, I do have a lot of the data all day long. So, but there are gaps in my data sometimes, as when I have to turn off my computer. So that said, okay, here's a sell. Yeah, it did. You got some pips. I hate dealing with these FX guys because they'll always, I'm getting my pips on, just make money. Here's a sell. This is around, I don't know what that is, 38. Yeah, it didn't really sell down, came down to around the 30 level. Here's where I'm missing some data. Okay. Again, here's a buy. That's what I talk about where here's one I missed. This one didn't work out. This one, you got the little break before it went up. This one didn't work out. I don't know if I should be showing this. Okay, here's a nice one. There's a nice sell. Unfortunately, this is at 8:30 p.m. Chicago time. But it's a nice one. This is a 5-minute chart. That's 25 ticks. Some sells. Smaller one here. Got a gap here in data. Okay, here's a buy. Yeah, it kind of worked out a little bit, mostly sideways. Not claiming any big victory there. Let's see. Here's a little buy again. Kind of went quiet. Sometimes, after 1 o'clock, especially on what day was that? The 5th. That's Thursday. It's Thursday ahead of non-farm payrolls. Well, here's a sell. Well, that's 6 o'clock at night, basically. But I'm missing some data in there, so I don't know what happened. This is the non-farm payrolls. That's why you see it trade up to 80 and down to 05. Here's one. I don't like to take signals on the first bar of the day because sometimes it doesn't, especially on this indicator where it reads back the previous data. So if I'm missing data, so say I just started and you're missing some data, it's going to give you a wonky signal the first time. This is the 9th. This is already the next week, the Monday, and so here's a signal. Signal gets short. You get short around the 05. It trades down to 85. That's 20 or so ticks there. Even there, before it turned around. Again, it's not something, this is a 5-minute chart. How long are you going to hold a trade on a 5-minute chart for? This is, what time is that? 7:40, by 9 o'clock. Again, you're getting short on a 5-minute chart at 7:40. You're not going to be holding it until 1 o'clock. I mean, if you did, yeah, that'd be great, but you would have taken some heat up here. Really on a 5-minute chart, you got to ask yourself how long you're going to hold it for. If you're going to be holding a trade from 7:30 in the morning until 1, 2 in the afternoon, you probably shouldn't be trading a 5-minute chart. So here's another one. This is 130, a little bit, yeah, it's a little sell. It's nothing spectacular. Okay, this is on the 10th. So here's a nice buy. It wasn't no breach there, but it went from 70 all the way up here into the 90s. And I got a sell signal, but this one I have my data ends here at 10 o'clock. Get a little bit of a sell-off before it turns around. The 11th, this one, yeah, it didn't really work out that great. Yeah, it worked out a little bit, but still just sort of went sideways on you. Here's 2 that failed. Well, actually, I don't say failed. Did get a little bit of a pop, but then fail. Usually when you're trading, you get long, you get that initial pop, and then it doesn't continue. That's usually not a good sign, especially once you see the red candles coming in. That hey, don't expect it to come right back down to your low a third time and then turn around. We eventually found our low here, 705. You're getting along somewhere around the 85. We trade back up to 10. And here's one, didn't really work out. We sort of probed higher and then came off. Here's a little one, worked out again from this 75 area up to almost to the 90 area. Here's one, just kind of went sideways. It's already 1 o'clock. That's what, the 12th, Friday the 13th. Okay, this is the evening session, don't have the full data. Here, this is the European morning, about 2:45 Chicago time. Well, this one here, we came out, took out the low. It didn't hold. Again, my look back is 1, 2, 3, 4, 5, 6, 7. I forgot what it was, 7. I think I got 9. So again, I don't know if I even would have taken the signal here because my look back period is 9. Definitely the first bar I won't take. But if my look back period is 9, I might be willing to take it. Probably not. For this example, I'll say no. Even though it did turn around. Here was a nice buy. Yeah, it popped up initially, then just went sideways, started coming down. This was a sell. You got the pop up, through it initially. Nah, didn't really work. Okay, where am I here? 16th. Again, that's the sell on the second bar. This one, was a buy. It's kind of choppy. The 16th was it's a Monday. It popped up, but then just really didn't. Yeah, okay, you got a pop, but then it just kind of went sideways. Okay, where am I? Anything else here? No, not much. And here's a buy that just sort of went sideways before selling off. Again, you're getting along here at 6:15. If you're holding it and the market hasn't paid off by 7:15, you shouldn't be holding it. I said if the trade's not paying off, an hour after you're into the trade, you shouldn't still be in the trade. Get out with a small profit or something. Don't wait for it. Don't think it's. Like I said, don't wait for infinity. The trade's not going to run to infinity. At some point, you should be looking to get out. And this is one of those cases. Well, people say, well, yeah, look, finally, some of these vendors will say, hey, look, you trade all the way up to 45. You're long for 20. Well, yeah, it also went down. But again, if the trade's not going in your favor, after an hour on a 5-minute chart, you really shouldn't be holding the trade. That's simple. You should be getting paid on the trade, and you should be getting paid, relatively quickly. Okay, now this is a crude chart. This is a Renko chart. To see how it worked. Again, I'm just, I started the analysis starting May 5th. So you see 5-2. It's not February 5th. This is on my setup. I have it set to the European standard. So you see the day, then the month. And people say, why are you looking at a June contract in February? I'm not. The way my computer's set up is the dates are European schedules. So you see the 2nd of February. Okay. So, and this is a Monday. That's why I'm starting here. first Monday, first trading day of May. Okay, this one, and this chart, I believe, is, I think I have it set as what I call my Mike's index hours, which is basically, basically 7 in the morning until I think 4 o'clock Chicago, 7 in the morning Chicago time till 4 p.m. Basically the main index hours in the U.S. Okay, so here's a buy. It didn't really work out. Yeah, you did take some heat. Honestly, this is a little bit too much heat for me before it turned around. And then down here you see a little bit of a sell, kind of went sideways, nothing spectacular. Whoops. Okay, so it's going sideways here. This one failed. Okay, boom. Here you get a nice sell. Around the 45.40 level. Boom. What do we trade? We trade all the way down to 45. And that's 50 points, 50 ticks in the crude. Actually, it even went down lower. It's from 45.40 went down here to 45, 60, 65, where you got a buy signal. Then went back up from 65 back up to, 45 even. So, you could risk a little bit here. You could have this, you're getting short here. You have a stop here. If you're getting short when this bar closes, you're getting short 45.26. You have a stop around, 33, 34. 33 is fine. 34, we'll call it 30. Get short at 20, 26-ish area up to, 34. That's 8 ticks. Okay, that's fine. That's 8 ticks risk. Some people say that's too much. Well, are you willing to risk this? Close this. Are you willing to risk like a bar like this? 8 ticks to get something like this, or even just get this? I'd much rather risk 8 ticks to get, get this and get this. Okay, and then later, 1 o'clock. I don't really like to look at crude that much after 1, because most of the big traders have already finished trading for the day by 1 o'clock. I mean, you do have the markers later, but still, Europe is closed. Asia is obviously in the middle of the night already. You're better off trading it during the main session. So that was, what day was that? That was the first trading day of the month. Here you get a buy signal. Didn't really work out. It did pop up a little bit before stopping you out. Again, if you're trailing your stop, you can figure out where to put it. Maybe you want to tighten it a little bit after it starts going in your favor. So instead of risking the full 8 ticks, once it starts popping up in your favor, you move your stop up to -4. It depends, on your trading style. You may want to risk the full amount, okay, or not. Really, there's different ways to trade. There's no one right way to trade. Here was a sell. This one failed, stopped you out. You lose. If you're, it stopped you out pretty quick. You're losing your full 8 ticks. Now here's a sell. Again, 43.75. It's a 50 tick winner, basically. Or not 50 ticks. It's 40 ticks before it starts turning around here. There wasn't any buy signal. It would have been nice if you get a buy signal. But, once a steep sell-off occurs, and then you start going back up, that's where you're looking to get out. Again, it's after 1 here. I'm not necessarily looking to take any trades. This one's too early. I talked about taking signals right around the open, let it settle. Here's one. It started to work out, then turned around, stopped you out. Okay, I can take that loss, or I can take, if I'm trailing my stop, maybe not as bad as you would have it. Okay, then here you get another nice signal. Yeah, you're getting short. 44, 15-ish, 44.10, what have you. It trades all the way down to 80. Get a buy signal here. Okay, maybe you can take some off. Okay, and then it sort of goes lower. This one doesn't work out. This one doesn't work out. Here's a nice buy signal. Getting along here again around the 44.30. If you're trailing your stop, it probably would have stopped you out at break even or small profit. If not, you're getting along from 44.30. Where up, I don't want, again, I'm not looking to hold it all the way to the close, but going up until 1 o'clock here. I don't like to trade, necessarily after 1, but hey, if the trade is in my favor, I'm going to try and ride it out as long as I can. Okay, so what day? The next day is the 5th of May. Let's scroll forward a bit. Okay, so you get a sell signal here. Let's make this chart a little bit bigger. Alright, so there's a nice sell signal around 40, what price is that? 45.65-ish. You know, it trades down into the 30s. That's a good 30 points. You know, here you get a buy signal, kind of goes sideways on you. You know, maybe you get a little bit out of it. Maybe you get a scratch. Maybe you get a small loss. You know, but you just had a nice big winner. Here you get a sell. It did tick up through you before coming off. You get a buy signal here. That fails. Clearly fails. I'm not saying you would any other way you're going to trade it. And like I said, you know, sometimes the market doesn't necessarily find its bottom when you're looking to buy. You know, here, you know, you had a bottom. This sort of corresponds to over here. You know, we tried to hold it twice. It didn't. It just didn't. You know, I mean, that's how the market is. You know, not everything holds. You get one here that doesn't really hold. Okay, here you get one. You kind of reach it a bit. You know, it does turn around before selling off. Again, not every signal. You know, sometimes, you know, when you're trying to buy a low, it's tricky. Here's one sell. It did sell off a little bit before turning around. Again, you sort of came back up in here a little bit later. But again, you know, this is after 1. I'm not necessarily looking to be taking trades after 1, especially, you know, after 1 p.m. on a Thursday going into a Friday non-farm payroll number. You could make a case that it did sell off there, but I'm not going to make that case. You know, usually after 1 o'clock, I'm not necessarily looking to be trading crude. Okay, so let's go into Friday again. You know, this is the 6th of May. It's the non-farm payroll day, so you know the market's going to be a bit choppy. I always find that the non-farm payroll day is a day I'm not necessarily looking to trade. Here's a sell signal. It didn't work out. It got stopped out pretty quick. Then you get a buy signal. You know, after 8:30. You know, getting along somewhere, you know, between 43.92, 43.95. You know, trades immediately. You know, this one hops right up pretty quick in a few minutes. Next thing you know, it's trading 44, 44.20. Even keeps going up to 44.30, 44.40 before you get a sell signal. So you know, it's a move from, you know, basically 95 up to 35. That's nice 40 points. You know, you get a sell signal here that stops you out. Okay. Are you willing to take a little bit of risk here, you know, here to get a move like this? I think you should be. And I could be wrong. You know, everyone wants to have every signal be a big winner, but you know, sometimes you know, not every signal is going to be a big winner. You know, here's a nice little trade. You know, 45.55 gets up towards the 65 level before it just sort of stalls out. You could just see even the bars. Okay, compare this, right? You got up, up, then down, up, down. That's a sign that the market's struggling. You know, here you get the big up move, but you get green, 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 up, 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 up. You know, once you start going up, up, and then you just go sideways, it's usually a sign that, hey, this trade's not necessarily really working out for you. You might want to consider taking some money, you know, taking something off the table before, rather than letting it come all the way down to stop you out. I mean, that's me. But I'm not saying that, you know, everybody can do that. Okay, so this is next week, right? This is Monday the 9th. So here's a buy signal. Talking about, what is that, 65? You know, trades up to almost 80 before turning around and coming down. Here's another little buy signal. It worked. It then it sort of ran up here, just like here. You get green, 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 and then red, red, red. Are you going to let the 4th, 5th red bar come in? You know, get green, 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 then red, red, red. Are you going to just let it come in and take you out? No, you should be looking to manage the trade. You know, manage the trade, get something out of it, whether, you know, it's a small winner or a small loss or a break even. They don't have to let it come out to stop you out. That's what people always do. They don't manage their risk. They just think that, you know, hey, every trade's got to go to my profit target or it's going to stop me out. No. You know, being a trader is maneuvering in and out of the market. The market's going to give you opportunities to see what's going on and to get out. Here's a trade, gone up from 10 to 30. You could have easily got 10 ticks out of it. Easily. You could have probably gotten more out of it. Then you get a sell signal here. Yeah, okay. Again, knowing how to manage a trade, you're going to let one tick stop you out, or you're going to have your stop a little bit further. If you're trading with a really tight stop, yeah, okay, would have stopped you out. Usually me, I like to give it two ticks, not just one tick on the high of this recent high. Sometimes you will retest it and get through it by a tick. I prefer 2 to 3 ticks past here, but I mean that's up to you. If you're trading with an ultra tight stop and you're using it one tick past the high, you would have missed this whole move. Okay, so even if you did get stopped out here, you get another buy signal down here around the 4,400 level, and at least up to 20, 25. Honestly, I don't know how this move turned out. Okay, we did get up to 30 before starting to sell off. You got two red after this series of green. You might want to see how it's going to pan out before you necessarily get out at 20. Even if you did hold it and got up here before it starts coming off again, the second time you start printing some red bars in succession, I'd be looking to get out. Okay, then you get another buy down here. Again, same thing. Green, 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 then you got red, red, red. Where are you going to get out? You should be getting out somewhere when it's in here rather than somewhere down here. Don't let a winner turn into a loser. Okay, that's whatever. That's right before the close. I wouldn't have taken it. I'll just go through. Well, I'll just get through this week with this crude chart. I don't want this video being too long. It's already over 30 minutes. Okay, so you come up here. This is what 8 o'clock. You get a sell signal here. You get the short somewhere around the 85 level, 83, 85. It's a quick 20 ticks. Before you get another signal and sort of get stopped out. Okay, don't catch that whole move. I mean, you'd love to catch moves just like this. Everybody wants a signal that's going to tell them to buy here and sell up here. Sometimes it's hard to see. Okay, so let's see the next day. Okay, so this is my day. My data ended early that day. I turned off my computer. I had something to do, so I actually turned off my computer. That's why I got no data. This is the 11th already, Wednesday. The inventory number came out. No signals yet. Okay, you got a little signal here, sell signal here. That didn't work out. Okay, let's see. Okay, so this sell, it didn't work out. Started to, but then turned around on you. Again, you should know how to manage your trades. It's something, when it starts to work out, then you get, you can see the candles being green against you. That's a sign that try and get out if you can, with a break even or a smaller loss. Here's a sell. You get alternating candles. That's not a good sign, and you're just sort of hanging around your entry. Not a good sign. You don't need it to pivot around here for 1, 2, 3, 4, 5 bars before the trade's not going anywhere. If you're getting short here and then you just trade back up, trade back down, trade back up, trade back down. I don't know. I don't think you need to be a PhD in trading to know that the market's going sideways. I don't need it to come up to here to stop me out. I'd rather, after 1, 2, 3, 4 bars going nowhere, basically hanging around my entry price, that's a good enough sign for me to try and get out at a scratch or even, a couple tick loss rather than taking the full loss. Okay, so, that day ended, it wasn't that great a day. You had, 1, 2 trades, I think 2 or 3 trades, and, they didn't really work out. Not every day is going to give you a 50 tick winner. This is the 12th, which is Thursday here we're coming into. Let's see if there's any signals. Again, I'm just choosing these days. I mean, this is the first 2 weeks of May. Okay, here's a trade. It started out, but then you see it turning on you. Again, do you want to wait till it comes up here to stop you out, or you're short here, it starts going in your favor. Do you need it to turn literally all the way against you before you get out, or are you going to be managing your trade and getting out, around break even, or a smaller loss than the full loss. I mean, if you're just using, if you're trading multiple lots and you're taking the first 10 ticks, yeah, you got at least 10 ticks out of that trade. Similar thing here. Down, down, turns around on you. Do you need it to come all the way back up there to stop you out? Then here's one. It's 1 o'clock. Even though it did work out, it said it's not a trade that it's not a time that I'm looking to trade the market. So that day wasn't that great a day. Okay, this is Friday the 13th. We'll see if there's any signals here. Okay, here's a sell. It didn't work out. I think it would have stopped, honestly, I think it did stop me out. Got back up there, getting short around this 18 level, trading around 24. To me, that's clear enough through there to stop me out. Okay, then again, you sort of get this side-by-side action. You're getting along here. I don't say you could scalp this and get 3 or 4 ticks out of it. I'd just be happy to take a break-even trade there. But you know what? If to watch it, see if we're going to come, get through this level, there's probably going to be a chance we're going to go lower. Instead, well, I didn't even notice the time on this one, but it was already after 1 anyway. So, but when you're just looking at it, I mean, really, just staring at this back and forth. Regardless, had I taken this trade, get back and forth after, like that. You're looking at that, try and get out. You don't necessarily want to hold it, much more than you really need to. So, okay, well, anyway, this is the following week here. Yeah, this one, I'm kind of hesitant just because it's so close to the open. I mean, this is Monday. This chart starts at 7 o'clock. And we did open higher. You did get a little bit of a sell-off, but still, I'm not going to say, hey, take that trade or by any means. If anything, I'm just a little bit hesitant right around when my chart starts. Honestly, I'm a bit curious to see how this day turns out here. Again, it's 1 o'clock. I mean, it's up to you if you want to take trades after 1. I mean, it's Monday, so it's probably a little bit more interest. Yeah, this was a nice trade, but again, I'm not going to sit here and say, yeah, look at this nice winner after I just said, I'm not looking to trade after 1 p.m. I know some people like to trade until 2 p.m., which is the old floor close 2:10, I believe. Me, no. So I'll just wrap this up here. So again, thanks for watching this video. This was just sort of a preview of the new software that we're going to be releasing soon. It's called the Price Rejector. If you're interested in it, just shoot me an email. We're probably going to release it anytime now. We're just working out some kinks. If you want to learn more about the Orderflows software or the Price Rejector or the Delta Scalper, send me an email. My email is mike@orderflows.com, or just visit the website www.orderflows.com. There's a form on there you can fill out and send me a message. So, as you can see, these charts, I showed you how it works with the order flow chart. I think it works best with an order flows chart, but it can be used with a normal bar chart. It can be used with wrinkle charts. You can look at it at different time frames, however you want, however you trade. You can basically use it with any type of chart, I'll say any time range. Honestly, if you're going to say, well, I tried it on a 15-second chart and it didn't work. Well, okay. I mean, very few people trade on 15-second charts, and you got to be realistic. I'm willing to work with you to make it work for you. Sometimes people buy stuff and, oh, this is the worst indicator. I've been trading for 20 years. This is the worst indicator ever. Well, if you've been trading for 20 years, honestly, I don't think you really need to be buying indicators nowadays. You should have a way of trading. I mean, I could understand, trying to add something into your trading, but, if you've been trading for 20 years and you can't get something to sort of fit in, then, your trading is so sophisticated that you don't need indicators. But, if you're going to say that, least share some information, like what sort of time frame you're using it on, or what market you're looking at. To say, oh, I tried it on every market out there and every time frame. I trade multiple times. Well, come on. I know this works. I trade with it. I know a few other testers that have been using it are also trading with it. So to dismiss it as saying, this is crap, I think is a bit harsh, especially if you're not going to back it up with, any examples. I mean, I'm not out there to scam people out of money, although, some people feel that way when, something doesn't work to their satisfaction. But, people, they expect that every indicator is going to turn their computer into a cash machine, that they could just turn it on and print money. It's not like that. Trading takes work. It takes effort. It takes thinking. And, sometimes people don't want to do any of the above. But, if you're willing to, want to learn and, willing to sort of, I'll say, take a leap of faith, but, trust me and, trust that what I've got is something that can make you money, then, hey, by all means, let me know. I'm willing to work with you to get you up to speed. I even test, I'll say I test things for people, but, people say, hey, what, I look at this market, what's a good time frame to look at? Tell me. I know that everybody trades different things and different time frames, different markets, different time frames. And I also do. So if say you're trading on a 10-minute chart and it's not really working properly as good as you would like it, let me know. I could look into, either I could suggest, hey, maybe go down to a 5-minute chart or 10 range chart or something, different. I can suggest, I have my own experience and I have our other users' experience as well. So it's not just tapping into my experience, you're also tapping into sort of a network of other users as well. People share what works with me, and, they say that, and I ask them, it's okay, can I share this with other people? And sometimes they say no, okay, and I respect that, and sometimes they say, yeah, sure. Because, after all, if with the markets, what works for some people, if they could get a few more people to follow, and everyone buys at the same level, then it's great. They'll make more money trading. So anyway, again, just visit our website www.orderflows.com and send me an email. I'm not sure. We'll probably be releasing this software pretty soon. And so if it's something you're interested in, think it could work into your trading, by all means, let me know, and I'll get you set up. So thank you.